Let's talk a little bit about Apple. Everyone always wants to talk about Apple, right? It's kind of the it stock, it company. You have a $45 billion stake, more or less. How closely do you follow the company? You know, people are concerned they haven't really introduced any new products.
Well, if you have to closely follow a company, you shouldn't own it.
Really?
No, I mean, if you buy a business, if you buy a farm, you know, you go up and look, you know, every couple of weeks to see how far the corn is up, and you know, do you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that? You know, you buy a farm and you hold it for. I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once. You know, I mean, it doesn't grow faster if I go and stare at it. You know, I can't cheer for it. You know, more effort, or something like that. And I know there's going to be some years when prices are going to be good and some when prices aren't going to be good. I know there's years when yields will be better than others. But I bought the farm, and
so Apple is kind of like a farm.
Well, it's a long-term investment, and if you own the best auto dealership in town, the best brand, and had somebody good running it, you wouldn't drop by every day and say, you know, how many people have come in today, or, you know, I think interest rates are going up a little, maybe it'll slow down our sales or anything. No, you buy it knowing there's 365 days a year, and you're going to own it for 20 years, so that's 7,300 days, and you know things are going to be different from day to day and year to year. You shouldn't buy it if the day-to-day stuff is important.
Nearly 70% of Warren Buffett's portfolio is invested in these 5 stocks. Diversification ranks among the most important components of many investment strategies because if you go all into one stock, God forbid that stock doesn't do well, you lose all of your money. No matter how good your bet is, like even with Tesla, I made some decent money investing in Tesla stocks, so did a lot of people who believed in Elon Musk. But there were so many instances where Tesla could have gone bankrupt. So what if Tesla could have gone bankrupt? Yes, the world would have been a little different, but so many of us would have lost our money. So that's why diversification is important. But when it comes to Warren Buffett once said diversification is protecting against ignorance. It makes little sense if you know what you're doing. So according to Warren Buffett, if you know what you're doing, diversification, you might not really need diversification. With Berkshire Hathaway delivering an average annual return rate of around 20% over almost 6 decades, that is 60 years, Warren Buffett clearly knows what he's doing, and from what Warren Buffett has just said, it's not surprising that he has not diversified Berkshire's holdings as much as most investors would have. Nearly 70% of Warren Buffett's portfolio is invested in these 5 stocks. The first one is Apple. Apple has ranked as the largest holdings in Warren Buffett's Berkshire Hathaway portfolio for several years. Berkshire owns 300 million shares of Apple worth around $73 billion, representing 24.8% of its total holdings. However, Apple does not dominate Berkshire's portfolio like it once did. Warren Buffett began reducing his stake in the company in the 4th quarter of 2023 and accelerated the selling process in 2024. His decision, however, came at a cost though, because Apple stock soared while he slashed Berkshire's position in the consumer tech giant. But however, Warren Buffett has made a lot of money out of Apple. So yeah, maybe he thought it's time to move on, but when he did, Apple went up quite a bit. Warren Buffett's second largest holding is American Express. Berkshire owns over 151 million shares of the financial services stock, which is worth at around $46 billion. And this is 15% of Warren Buffett's total portfolio. In his annual letter to Berkshire Hathaway shareholders in 2023, Warren Buffett listed American Express among a handful of stocks he expected to own indefinitely. Berkshire has owned Amex for several decades. Warren Buffett even noted in his shareholder letter last year that the company's share of American Express earnings in 2023 was significantly greater than its initial investment of $1.3 billion. Now that is a very great example of the benefit of buying and holding the stock of exceptional businesses. You don't have to worry about it. Now just listen to what Warren Buffett has said once again. Warren Buffett said that the company's share of American Express earnings in 2023 was significantly greater than its initial investment of $1.3 billion. Now this is why it's so important to buy good companies. The next one is Bank of America. Bank of America ranks as Berkshire's 3rd largest position Warren Buffett's company owns around 766 million shares of Bank of America, which is worth around 34 billion today, comprising of 11.5% of Berkshire's portfolio. And it was not long ago when Bank of America lagged behind only Apple as Berkshire's number 2 holding. However, Warren Buffett began regularly selling shares of this big bank in July 2024. And the next one is Coca-Cola. Berkshire owns 400 million shares of the Coca-Cola company, worth in the ballpark of $25 billion. And this stake makes up around 8.4% of Warren Buffett's portfolio, enough to land Coca-Cola in the 4th place among Warren Buffett's top holdings. And like American Express, Coca-Cola was one of the stocks Warren Buffett highlighted in his latest 2 letters to Berkshire Hathaway shareholders. It's also Warren Buffett's longest held position, and as he wrote to Berkshire shareholders last year, when you find a truly wonderful business as rarely as it gets, stick with it. That's the best thing you can do. If you find a great company to invest in, just because the company doubles, you don't have to sell your shares of the company, you could just hold it. Like a couple of years ago, I never would have thought of investing in a company for multiple decades, but seeing the volatility, you just bet on a company for a few months and then you lose the money, you do it again and you lose it again. Seems like this is the best thing to do. And I speak from personal experience, just buying companies like Warren Buffett did. Stock prices, they don't really matter. What values is the value of the business. And the next one is Chevron. Chevron comes in at a number 5 position on the list of Warren Buffett's largest position. Berkshire owns over 118.6 million shares of the huge oil and gas company, which is worth around $17.4 billion with its stake in Chevron, accounting for 5.9% of the total portfolio. Warren Buffett first initiated a position in Chevron in late 2020, and since then he has flipped between selling and buying shares of the energy giant. The legendary investor most recently sold shares of Chevron in the second quarter of 2024.